Yo, what is up? Today is June 19th. No trades today because it is a bank holiday. So I wanted to take some time and make a trade recap. This is for one of my buddies, I'm mentoring him for free. Um, and I want to do a trade recap over from what I went through yesterday. And yesterday was, for some reason, absurdly clean price action, which is nuts because June and May has been ass price action. Um, but I want to go over this trade recap and then maybe even go over a little bit more. So we're going to bring this down. Holy fuck, dude. There. There we go. Make this a little smaller. Because you don't need to be seeing me, really. So, yesterday, this is what it looked like when we were getting onto the market. This is the 4 hour chart. I had these two fair value gaps. Don't really worry about them right now. I believe they are 15-minute and 30-minute fair value gaps. But as you can see, we have a down candle, up candle, mark the lows of the 2 points. That's one of our lows. Down candle, up candle, mark the lows of the 2 points. That is another one of our lows. We have a high up here because we have an up candle and a down candle, high, up candle, down candle, high, up candle, down candle, high. We go in the 1 hour time frame. This is what we're seeing. This is what we're looking at. This is on ES, by the way. And there was a couple confluences that happened yesterday. And I'm just going to give an idea of what price was doing. As you see, this is where I took the setup. We're going to get rid of this, though. We're going to get rid of this, this. We're going to get rid of all of this. We're just going to go right into this. And this isn't forward testing. This is just a back testing the whole day because I already took the trade. I already know what happened. As you can see, I have this line marked out down here, though. It's something important to note in the 5 minute because what we ended up getting was a 5 minute SMT. And you will see that. But we can go through morning price action. Market opens. What does market do? Oh, this is beautiful. Beautiful. First thing that I saw this yesterday morning was on NQ. NQ came out and swept that 1 hour low and went really far down. ES did not sweep it out, giving us SMT. So one thing to note with that is we had a bullish SMT, and when you get SMTs, you want to take the lead pair. As of right now, ES did not sweep, and it's already trending higher when NQ swept even lower. I believe that was more right, and I'll get bitched at if I'm wrong on that, but just one thing to note. So then we're still in the 5 minute time frame. You know, we get on the market every day, mark out our 1 hour, 4 hour highs, and our 1 hour and 4 hour imbalances, and then we get it on the 5 minute. This is for me usually. I get on the 5 minute and I let price play out because first thing I need to see is a liquidity sweep, and then a high time frame confirmation confluence. What do we get? We had our liquidity sweep. NQ did not sweep the lows. NQ swept the lows. ES did not sweep the lows. Not only did we get the liquidity sweep, we had a 5 minute confirmation confluence. Why? Because we had a 5 minute inverse fair value gap. Orders were ripped through, got disrespected. This fair value gap got completely disrespected. To go on from that, we have our 5 minute confirmation. Well, look at that. We get another fair value gap that I marked out. And this is where I was going to take my entry. Usually I would want a little more, but because we already had the SMT, I wanted to take this entry right off rip, right on this candle. And that would have been, let's say I take it, we go down to the 2 minute, we're waiting for a fill. We get a fill, and what I wanted to enter was literally right here on that fill, on this, stops all the way up here. That's a 1 to 2.5. I think that was the original entry point. Maybe it was somewhere else. And as you can see, market ends up ripping past that. Pretty nice. But I didn't get in on this position because it rejected off of it so fast. I was like, fuck, I would have entered in all the way instead of right there. And I believe I got even a better entry beforehand that I had marked up. I would have gone in. Hold up. Right here. And that's a shit entry. I was like, fuck, I'm not taking that. So what I ended up waiting for was we had that, like I said, liquidity sweep on NQ. ES created an SMT because ES never swept that liquidity. Started trending higher. We had a 5 minute confirmation. We had a 5 minute fair value gap getting filled. So what I ended up taking the trade off of was we had a 2 minute fair value gap right here. What does price end up doing? It taps into it. And where I got in on that tap was this long position. Got in right there, put the stops right to that fair value gap. I think it was even shorter. I think I got in like literally right on that. Yes, exactly there. And it was a 1 to 2. So I risked pretty light because it was, later on. But I mean, in hindsight, I probably could have risked more. But the setup wasn't what I usually look for. It wasn't an A plus setup in my opinion, but it was absurdly clean price action. And I set my take profits at this point, and I took out half of my position once price reached to this point. So then what I'm thinking then too is when you get into trades, you need to look for places to exit on a win. Where could that be? Either other highs or lows or imbalances. At this point, we're looking for highs. If we're trying to exit on a win, we're looking for highs. So I already took out half my position, so I'm not going to lose money on this trade. I just wanted to leave runners. So what is one place that I could have marked out? This. I was like, okay, price could now, after it swept this, it could possibly be wanting to go and fill in this fair value gap, tap into it, and then reject down. Or inverse it. And what do we see? It inverses that. So then my next piece of, my next thing I was looking for was, I believe, a 5-minute. Yes. Let me show you guys this. Was this 5-minute fair value gap from here to here. And what does price end up doing? It's ripping past, and I was like, okay, since it inverse this, it's obviously wanting to trend higher, either to take out highs or fill in this imbalance. Now, there's 3 things that could happen, right? It could have went and taken out a high up here, or filled in this imbalance and then rejected lower, or it could have inversed this imbalance to sweep out this high all the way up here. So my second take profit was up around here. This is where my second TP was, and I would have been out of the trade. And what do you see? It's edging. It's literally edging my take profit. So then I entered out. I got out right around there after we started trending down, and we came back into this fair value gap. I got out because I'm like, okay, it's not looking good. It's not looking like it's going to get into it. It was a perfect time to exit right around here because, like I said, once it tapped back into the fair value gap, what do we see? It starts trending down the rest of the day. And honestly, now that I think about it, you maybe could have gotten an entry even for shorts all the way down, back down to here. But the trade originally was, I believe, 1 to 5. 1 to 5 is where I got out. Could have gone out at a 1 to 6, 1 to 7 if it came up into here. And if it went all the way up here, that would have been a 1 to 8, 1 to 9. But I got out around here, so that was a trade. And like I said, it was a liquidity sweep on NQ. ES did not sweep, so ES created an SMT divergence. 5-minute confirmation confluence from our inverse fair value gap. We had a 5-minute continuation confluence because a 5-minute fair value gap got tapped into, filled, rejected out of it, which is where I should have entered. Missed the entry, so then I got in on another retrace, which was a 2-minute fair value gap. Like I said, this 2-minute fair value gap right here taps into it, retraces back into it, rejects out of it. I got in, and as you can see, price went right back up. And yeah, that was the trade. Honestly, a really nice trade. It was really clean price action. I mean, I'm thinking maybe you could have even gotten shorts after we swept that liquidity, tapped into that imbalance. We could even go through, let's look. Let me just get rid of this. This is going to be me playing around because I only took one trade, but we had turn this magnet off. 5-minute fair value gap, confirmation confluence right there and right here. That got inversed, and we ended up getting, we have a fair value gap right here, 5-minute inverse. I'm just trying to get a good idea of what price went and did, and if you could have caught in shorts. Very messy price action right now, so I'm just curious if I can get rid of this fair value gap. So price up liquidity of highs. We had a 5-minute confirmation confluence with the 5-minute inversing that. There's no fair value gap for price to retrace into except right here, but it never did retrace into that. None around here. It seems like a fucking chop fest right around here. Fair value gap here. I don't know if there was shorts to get in around here, actually. Maybe actually right here. But no. Really the only trade that I saw was lawns. And that was the thing that I was noting. at most. But now this is for my mentee, my little buddy, and I'm gonna have to try to draw. So give me a break on this one, but we're gonna just draw like fair value. We're gonna draw an order block example. Let's make this smaller. And I think he's going to really like this. So let's say this is just a candlestick. I'm not drawing the, I will. This is a candlestick. We have liquidity right here. Let's say this is a low. This is going to be a bullish order block, which is what you will see. This is a low. And price ends up coming down. As you can see, price comes down and sweeps out that low. Now this is not an order block yet, this is just a liquidity sweep. But what you get from that is possibly, let's say price sweeps out that low and then it starts trending up. Fudge. Price starts trending up like this. I could draw these in maybe a little bit better, but so just to give an example, this bearish candle, sweeps out the low. And then when you get an order block, a bullish order block, you want 3 bullish candles. That it makes a very strong order block. You want 3 bullish candles like this. You don't want any indecision where one of these candles is like this. You don't want a down candle, a little doji. You want 3 bullish candles, showing that price is very bullish. It's proving that there's bullish order flow now. And then if you get these 3 candlestick patterns like we just got, one thing you want to do then is, let's say you have wicks on this candle that's left at liquidity. This is how you mark out your order block. So you have a wick right there. If you have 3 bullish candles after the sweep, what you want to do is to mark out your order block is take the highest point of the candle that swept liquidity and the lowest point and mark it out. And what you want to see price do is, hopefully, so let's say we got a liquidity sweep, you want to see maybe a inverse fair value gap. So let's even, I'm gonna get really fucking nasty with this shit. Fudge. I always be doing this shit. See, we get something like this. We get like that. So then we have a fair value gap right here. Let's say this is a 5-minute fair value gap. So this is, let's say we're on the 5-minute chart. Price comes down and it makes this fair value gap. And what we end up getting then is this liquidity sweep. And we have 3 bullish candles rejecting right off of that. Oh, the screen's lagging. What we want to see the price do is come up, inverse this fair value gap, and then come back down and retrace. Like it's the same thing as your continuation confluence for a fair value gap. We have a fair value gap in between here. Maybe price comes down and retraces in between this and then rejects out. Or it's coming down and comes back down like this and retraces into the fair value gap, the order block. And then what you want out of the order block is confirmation confluence. Let's say a 5-minute breaker, like a 1-minute, 2-minute breaker structure, or a 1-minute to 2-minute, preferably 2-minute inverse fair value gap. And let's say you get that inverse fair value gap out of there, price most likely will rip. Oh, let me just get rid of that part. Price will rip. Let's say you get your inverse fair value gap right here out of that. You put your stops like right below the fair value gap, and then you go and target other draws on liquidity, which could be 15-minute, 30-minute, 1-hour draws on liquidity. Let's say we have a draw liquidity up there. It's 1 to 5, let's say. This is just an example for you. Very messy. I'm not an artist. I never claimed to be an artist. But yeah, that's really, if you need to screenshot this, just go back on this video. That's an order block. I could try to find actually a YouTube video or just order blocks. That's something I would suggest. Is one thing I did, and I still do time to time, is go and if I'm curious on just like how things look, I'll look them up on YouTube and I'll just find a trusted source and then get an idea of like what's a good order block, what's a mediocre order block, and then what isn't an order block, right? Just deleting all this stuff. But yeah, that is really the trade recap for today. That was order blocks. So, do I have a text? This is just, let's just go over my strategy real quick. Just give an idea. So, first, we need a lick sweep. First, we need a liquidity sweep. Second, I thought I hit the 2. Second, we need a 5-minute confirmation confluence. Oh my gosh, I can't spell. Which could be 5-minute break of structure / 5-minute inverse fair value gap. Third, we look for a 5-minute continue. Man, you know what I love about Grammarly? It does shit like this. I'm signed out. I literally just gotta be able to fix one. All right, you know what that means. Confluence. All right. Third, we look for a 5-minute continuation confluence. For me, that's, you could do breaker blocks, but for me, that's order blocks, fair value gaps, equilibrium. Well, I actually spell equilibrium right, but I can't spell confluence right. So, like I said, first we need a liquidity sweep in order for the strategy to work. Second, we need to look for a 5-minute confirmation confluence, which is, why do I have percentage here? Which is a 5-minute break of structure or a 5-minute inverse fair value gap. Third, we look for a 5-minute continuation confluence, which are order blocks getting filled, fair value gaps getting filled, or us being equilibrium. Now, equilibrium you don't enter off of alone. You'd want a confirmation or continuation confluence out of that equilibrium, because equilibrium, go back, watch the mastermind. That means we're in discounted price, and when we're in discounted price, you want to see price give us confirmation out of that, so then we're start fucking booming. So after we get that 5-minute continuation confluence, fourth, we look for 1-minute or preferably 2-minute or 2-minute break of structure or inverse fair value gap confirmation confluence. So first we need a liquidity sweep. Then we need a 5-minute confirmation confluence, which is a 5-minute break of structure, 5-minute inverse fair value gap. Then we look for a 5-minute continuation confluence, which is order blocks, fair value gaps, or equilibrium. And then after we get those continuation confluences and price came back in, filled them, and it's rejecting out of it, ideally you can get aggressive entries out of there. And once you have more market experience, that's what TJR does. That's what my buddy Josh does. But if you're still starting to learn out, you're just trying to understand the strategy and get better at it, so you can take aggressive entries over time, you want to wait for the fourth step, which is we look for a 1-minute, preferably a 2-minute, just more confluence, it's a higher time frame, holds more power, or a 2-minute break of structure or inverse fair value gap confirmation confluence. What I prefer usually is entering off of that inverse fair value gap confirmation confluence, because when you have those inverse fair value gaps, screenshot this, go over this if you need to. This is literally it. That's the strategy. And there's more that goes into it, just a little, but that's basically what you're looking for on the charts. But like I said, I like entering off of inverse fair value gap confirmations, because when you enter on, let's say this got inverse, what I like about them is you can enter in right on the inverse and then put your stops right below it. Because if price comes back down and rejects out of that, comes back down, but let's say price is right here. I enter in right here. Actually, I have a better example. Let's say we get rid of this fair value gap. We have a 5-minute inverse right here. Let's say we've gone everything else in our strategy, so we just got the 5-minute inverse. You enter in on that inverse, and you put your stops right below it. Because if price comes back down, let's say price is up here, and it comes back down to this point, to this bottom line of the fair value gap, it's invalidated the trade. The trade is no longer valid, which is just telling you, okay, that's okay. I'm not looking, I don't need to keep chasing price. I didn't do something wrong, or what did I do wrong? And I just like those better than break of structures, because break of structures, you got to put it to the lowest, the most nearest recent low or the most recent high. And those can be pretty big sometimes. So you can get, I feel like, worse RRs, but sometimes you can get really good RRs. But like, I mean, if I entered even in off of this confirmation confluence, which is not my strategy, so I didn't do it, price never returned back to this point for a while. I mean, this happened at 8:50. Price didn't come back to this point until 12:30 p.m. And I mean, just look at what this trade would have been if I just got in right there. That is a 1 to 23. Do the math. You risk $1,000 on the trade, you get a 1 to 23 RR. You do the math. You do the math. That's one trade. Imagine you have 500K accounts. You've been scaling it over time, and then you make risk that you're at this point risking $1,000 per trade. You enter in right here. You risk $1,000, and you got a 23R. You got a 23R return. That's fucking ridiculous. Multiply that by 5 with your 5 accounts. Printing. I mean, this trade could have gone if I entered in right there, which I mean, I didn't. Could have gone for what? 1 to 39. But like I said, that was just off of the SMT and my 5-minute confirmation confluence, so we're not really worried about that. I did not take that. But even on the, if I got in even, let's just say, right on this, it tapped into it, rejects out of it. It's such a big, yeah, 1 to 2, 1 to 6, yeah. But that's literally the strategy that I used yesterday, and I didn't. Let me just go over like what I got and what I didn't get. So I got the liquidity sweep. I had a 5-minute confirmation confluence with the 5-minute inverse for value gap, and I had my 5-minute continuation confluence. And then instead of me getting my 1-minute or 2-minute break of structure inverse for value gap, I got in on another retrace, which possibly maybe we got also a 1-minute or 2-minute inverse for value gap or break of structure at this point when I got in on that 2-minute retrace, which is something I could look for. Yeah. This could have been your breaker structure too as well. Like I said, that's basically the strategy. Yesterday I entered in off of a liquidity sweep, and then ES made an SMT. I got a 5-minute confirmation confluence, and I got my 5-minute continuation confluence with this fair value gap right here. Or this fair value gap right here, getting retraced into, rejecting out of it. And then the same thing happened here, and that's where I got in, and I rode it all the way up to here. So yeah, that was literally the strategy. Long video. Didn't mean for it to be this long, but that's a little trade recap.